Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Matterport. So, Matterport has been an absolute roller coaster ride in the last several months. Gonna go through that. I'm gonna talk about how Q4 21 results are gonna come up in the next couple of weeks. I'm gonna make this argument that the stock, even now, is still overvalued. That investors paying 17 times, 16 times forward sales next year's 2022 forward sales are probably paying too high a premium to get involved in this investment. So I'm going to go through that. I'm going to highlight some of the aspects about its path to profitability, and then we're going to talk about its prospects. So I'm going to just jump right in here. So the thing that I find quite interesting is that in the past 3 months, the stock was up 40% and then down more than 40%. And when I wrote about this company about 2 weeks ago, I made the case, okay, that you shouldn't be necessarily thinking so much that Matterport is investing in the future. You should kind of try and think more about balancing your odds as an investor. And I made the case that, this is what I wrote 2 weeks ago, that even though Matterport stock is down 40%, you shouldn't rush in to buy the dip right now. And as it transpires, I wrote that at $15 a share, and in 2 weeks it's down a further 30% to approximately 10 and change right now. So when you look at it, right, so don't think that just because a stock is down, that it cannot go down further. There is no rule to say that, oh, the stock's at 10 and it can't go any further or whatever. You got to think through and remember the stocks are not in a vacuum. You got to think through and try to understand the opportunity that you are being given. And that's the negative news. So the positive news is that after the stock is down so much, at some point in time, you get a new shareholder base that comes in with fresh pairs of eyes. They're not going to be despondent or whatever because they have no bias here, and they're going to come in hopefully with a new fresh. Well, they'll obviously come in with fresh capital. So that's going to be, if you have the stamina, that could be kind of something to think about. That being said, I continue to contend that you shouldn't really go in and buy this dip. Now, here, let's put some things in perspective, right? So we're about 2 weeks away from Matterport's Q4 21 results. The crucial aspect here will be the guidance the company puts out. Okay. Now let's just put some figures in context. From 2019 to 2020, revenues were up 87%. Very strong growth rates, right? Now, as it looks to exit 2021, it's gone from 87% growth rates to approximately 28% CAGR. So this right away, you kind of think of yourself, okay, a business growing 80% is very different from a business growing at sub-30s, okay? And remember, for Q3, they just reported that the revenues were up 10% year over year. That being said, the analysts following this company still believe that things can reaccelerate and the company can come back and grow its revenues by 160 million, dollars in 2022. Now, I'll come back to this figure in a minute. Let's just take some context. So let's think about its capital, as the movement of the capital through the balance sheet. So a few weeks ago, they've bought back some of the warrants. They bought back 9 million worth of warrants. That implies that when they announce their Q4 results in a few weeks, they're probably going to say that they have, as of right then, approximately 250 million shares outstanding. Okay. The good news is when they bought back the warrants, they diluted shareholder, yeah, but that implies that the balance sheet right now carries approximately more or less 500 million net of cash, okay, and no debt. So it's approximately kind of in the ballpark of 20% net cash, the market cap. So if you're paying kind of about 2.5 billion market cap, you're getting approximately 20% net cash. So it's kind of, that's kind of gives you a bit of a margin safety. The other thing that I wanted to highlight is, let's think through what Matterport actually does, okay? So previously, Matterport would sell your camera. It's not a high margin business, but you sell your camera, get you in the ecosystem, sell your subscription to the platform. Very good. That's two revenue streams. However, right now, as technology has developed, the technology it means that you can, on your camera, on your phone, you can pretty much do the very similar amount of technology that you could do with Matterport's cameras. So before you get into revenue streams, now you're just going to get the subscription business model. So that's higher margin, but the total amount of revenue that you're going to get is going to be reduced. So you'd want to see a huge jump in the subscription side of the business and to make up for the kind of flattening out or petering out of the sales of cameras. However, for Q3 21, you can see here that the subscription side of the business was only up 36% year over year. That is not particularly enticing. Everyone's talking about Matterport is the new meta. I mean, this isn't the new meta. Okay, we're kind of trying to eke out 100 million in revenues over the course of a year. It's not the new meta. Okay, um, so I've been investing for a while now, and I kind of know that when we're in a bull market, the last thing you want to do as an analyst is talk about the free cash flow profile of a business. Thou shall not talk about profitability in a bull market. But since things are kind of sold off slightly, many of the tech stocks are now well into correction territory. Many are down 40, 50, 60. Stuff is down 70%. So it's a whole different story now. Now we can start discussing free cash flow profiles. And as you can see here, so for the 9 months of 2021, they burned through approximately 27 million of free cash flow, and that includes, obviously the stock-based compensation and also anything to do with the warrants. So, as we go through, it's kind of that stock-based compensation is going to have to at some point be reflected of more shareholder dilution. So are they really worthwhile? Is their strategy of investing for growth really paying off? And I don't really see how that's the case. Now, let's think this through, right? So if Matterport grows its revenues by 45% year over year into 2022, as analysts expect, that means Matterport will reach 160 million of revenues in 2022. Now, let's make the case that analysts are correct. I think that the revenues, the consensus is a bit lofty, but let's make the case that analysts are correct. That puts the stock price at 16 times this year's revenues. Now, for a business that's really, really unprofitable, with no path to profitability, questionable business model, and volatile growth rates, I think that that's a punchy price to pay. Let's just see how it goes. So this, I didn't want to kind of just go through and say, oh, I told you so, but I wanted to kind of give you some context to help you think through, because the hardest thing is like when you buy the dip or you don't buy the dip. So I want to kind of give investors, a bit of my thought process and for you to think through the risk reward profile here. Because you can't control where markets are headed. What you can control is the companies that you deploy your capital towards. But as I stated throughout several times, there are better opportunities right there to invest away from Matterport. And if you want to find out some really compelling opportunities in stocks that I'm buying right now, don't forget to check out my marketplace. It's called Deep Value Returns. I provide you with high quality, actionable investment ideas. Thank you so much for listening. Hope to see you throughout the earnings season. See ya.